So, what are the advantages of a Roth IRA? Today, we're going to take a look. Stay tuned for Prudent Money. Good afternoon. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Thanks so much for joining me today. You know I do appreciate it. Listen, I want to make sure that you know if you have a question and or want an opinion, whatever it might be, you can always go to the prudentmoney.com website. And at the top of the page, there is a link to click through, and you'll find a place where you can send a question in. We do get the questions answered. Love to get them from you. So be sure and take advantage of that. That's all at the website, www.prudentmoney.com. Also, one last thing I want to make sure that you do know about. There is a email letter list, whatever you want to call it, to sign up for at the website. That way we keep you posted every time we post something to the website and keep you in touch with what we're doing. So that's all at the website, www.prudentmoney.com. Let's talk a little bit about what happened today, because I think that there is a big lesson as the market takes off today, puts in a pretty good day. And of course, that's the way it reads today at 2 o'clock. I'm actually pre-recording the program, but so far so good. And it looks like the market is bouncing back. Well, the question is it bouncing back, or is it just a knee-jerk reaction? Over the weekend, President Trump, like he typically does, except for this was different. And I'll explain what I mean by that. Put the ultimatum on the table and said, if you don't do this, we're going to do this. He's done it many times in the past. It's a negotiating tactic. He's very good at negotiating, and they call it the Trump taco trade. I don't know who came up with that, but it's kind of funny. Basically, the Trump taco trade is, it says always that Trump always chickens out. That stands for taco. How they came up with that, who knows? But anyway, whoever came out with it, it stuck, and now it's called the Trump taco trade. And basically, what they're saying is that he gets up, he puts the ultimatum on the table, and says, if you don't do this, we're going to blow you to smithereens. And he did this to Iran, and basically, he would blow up their energy system, the grid, all kinds of things. They would pretty much obliterate the country. Well, it seems to me that if you wanted to successfully take advantage of everything that is there in Iran, it would seem that obliterating the power plants and everything he wants to do would not make a lot of sense. But hey, what do I know? I'm sure he's got smarter people. We got people way smarter than me with war experience that know what they're doing. Doesn't seem that possible, but it seems like it's counterproductive to destroy everything. But he put that on the table and stuck to his guns over the weekend and said, by Monday we're either going to come bomb you or not. And so the traders are looking for the Trump taco trade, right? They're looking to buy a bunch of stock because of the taco trade. And come to find out, he backs off and says, well, I'm going to give you 5 days. But we've had great discussions. We've had good, positive talk. Then Iran comes out this morning and says, I don't know who he's talking to, but we have not had any discussions with President Trump, nor do we plan to. And even then, that shook the market a little bit. Markets came down some, but still having a good day. And this is the concern. Let's say that they came to a truce. You still have a lot of problems that have been created already that it's just not going to be something that the flip the switch, everything's going to be okay. We still have a very bad inflation problem that as this thing continues on, granted, if everything slowed down, they came to a truce, which I can't see, and that's the problem. We'll talk about that in a minute. If everything came to a conclusion that we're all happy, we're all going to work together, I know even saying it doesn't make any sense. Then it's not just like the prices are going to go just fall down and go down. Yes, they will in the energy field, the energy category. Gas prices should come down. By the way, they're up about $1 from a year ago. But gas prices should come down. I mean, the things that would make sense that would start to come down. But it's going to take a while, considering that we were not in a great spot before all this started. We've got a situation to where it's just going to take a while to unwind this situation with inflation. You have some of the damage that's been done to the economy. You're really starting to see it as far as I went, had lunch today in a place that usually is not packed like it was pre-COVID, but it does a pretty good amount of business. Today, there was probably maybe 20 people in that eating lunch, and a place that holds hundreds of people. So I think you're going to start to see this. You're going to start to see this really affect the economy. And of course, that's just one example. But you got inflation, you got the economy, you got a situation where you could have stagflation. And stagflation simply is a recession and inflation at the same time. Not really a great situation. And then a not so good options for a good ending. If what's going to happen is it almost seems like Iran is in the driver's seat. I hate to say that, but now, I mean, they didn't start this war. President Trump started it, and now, if he's going to successfully take out the first initiative was at one time the agenda was to take out the nuclear reactors and all that, but now it's changed, which I don't understand that. But the bottom line is you're going to have to put troops on the ground, which he's doing. That just doesn't seem like a good idea. But this is, I mean, if you're going to take Iran out, you've got to take them out with as minimal damage as possible. And because they still have infrastructure there that would be vital to the oil markets and the gas markets and all that kind of thing. So, he's going to, the chances of him coming out and saying, okay, we've come to a truce, I just don't think that that's really possible. I could be wrong, been wrong before, probably be wrong in the future at some point, but I just don't think that that's going to happen. So it'll be interesting to watch this play out. But he is in a situation where he's going to have to make the move. And regardless, if Iran was, if they were going to make they'd have to make a big move, like something on a terrorist attack on the United States. I think eventually we're going to see that carry out. We're going to see the obliteration of a country, and how that looks and what that means, and we'll have to see at the time. My point is that people actually, traders, a lot of talk on Wall Street today about the Trump taco trade, not about the inflation, not about the economy, not about the bigger picture, just about making money. So there's very little, I mean, it kind of comes and goes, but it goes from people are very positive to very negative. And it's just, you got to know that's a very dangerous market to be in unless you're willing to trade it. Get in, get out of stocks, that kind of thing. So just be careful. I personally think we're at the very beginnings of something here. And I think it's gonna take a while to and probably not like I said, not a truce. One's going to win, one's going to lose. And maybe everybody loses when you're talking about war. Just an interesting times that we find ourselves in, and but it is what it is. But keep one of the things that I think is very important. The news media is doing a very good job of following this. They were very quick to write articles about that. Iran said there's not been any talks and not any discussion. So keep in tune with what the news is saying. I think that's very, very important. I normally wouldn't say that, but I think that it is important to watch this and watch this play out, and especially when it comes to your being a stewardship of what God has given you. Let's talk a little bit about Roth IRAs, because there's a lot of buzz about these being a great investment, but really, are they an investment or are they an account? They are an account. And I think when you look at going into the future, I think that they are a very solid type of an account with a lot of great opportunity with it. So I want to make sure that everybody's clear on this is a time I would use a Roth. Maybe this time I would think do something different. What makes a Roth IRA a great place to put money, an account to put money into, to invest it? So you open up the Roth, place the money into the Roth, and invest the money into stocks, bonds, whatever you want to be investing into. To get a really good idea of is that something that makes sense for you, is you got to understand the difference in the pros and the cons between a Roth IRA and a regular IRA, which we're going to talk about at the end of over the break. This is Bob Brooks. We're up against a break. Stick around. I'll be right back. Hello, this is Bob Brooks. Proverbs 22:3 and Proverbs 27:12 are the exact same verse word for word. I call them the stewardship verses of risk. A prudent person foresees danger and takes precautions. The simpleton goes blindly on and suffers the consequences. On the Prudent Money Radio Show, we teach about risk, how to identify it, how to figure it out, and what to do about it. We believe that to be a prudent steward, you have to be a good risk manager. Listen to the Prudent Money Radio Show on Bible School Radio 91.3. Prudent Money, home of the modern-day steward movement.
Dynamic, practical, life-changing.
There's no point in going to church and not letting the Christ who gave birth to the church on the day of Pentecost change your life.
Join us each day as Pastor Paul Shepherd applies the timeless truth of Scripture to everyday life. It's Destined for Victory on this great station.
Weekday afternoons at 3:30 here on Bible School Radio, KDKR.
This is Rob Randall, your host and teacher of the Invisible War radio program. The Invisible War is the study of God's Word on how to walk in Christ's victory in the spiritual battles we face against the powers of darkness. Join me every Sunday morning at 9 right here on KDKR and KYJC in Commerce, your station for life.
Welcome back. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. This, if you've got a question for me, please go to the website at www.prudentmoney.com. There's a link at the top of the page. Click through where it says Ask Prudent Money. We'll get you taken care of, and I'd love to hear from you. And just go post, and we'll get you the resources you need. Well, we were talking about, and if you missed it, the Trump taco trade, why you need to understand about what you need to understand about that, what's going on with that, how does all this playing out. If you missed the first part of the program, you can always go to prudentmoney.com. We do post the podcast at the end of the day, and you can go take a listen to it through that medium. That's always there for you. That's all at prudentmoney.com. The difference between Roth IRAs and IRA is where you want to start. An IRA is simply a retirement account that you set up. You invest up to a certain amount of money. There's limits on that depending, and there's lots of criteria. You got to make sure that you can put that money in there. And you grow it over time. every year, year in, year out. If it grows, you don't pay any taxes on it. But when you take the money out of the IRA, that is when you pay taxes on the full amount. So where is the big tax break with an IRA? Along the way, you get a tax break. You don't pay. It's called deferred taxes. You don't pay taxes on anything. But where you get the big tax break, maybe big is stretching it a bit, but where you get the tax break is that you get to invest into that IRA with pre-tax money, meaning you don't pay taxes on the money that you invest into the IRA. And so for years, that was the supreme way to go. Now, let's talk about the Roth IRA. And it's funny because people weren't as interested in the Roth IRA as they are today. Part of it is I don't think that there's been as much discussion about it. Part of it is maybe a little bit of a lot of marketing by mutual fund companies to put your money into a Roth IRA and convert to an IRA, Roth IRA. We'll talk about that. You put money into a Roth just like you put money into an IRA, and you grow it over time. You don't pay taxes in either situation. When you get to the end and you have X amount of dollars built up in both of them, you start taking money out. As we discussed, the IRA, you're paying full-blown taxes on everything, 100%. With the Roth IRA, you pay zero taxes. Pretty big difference. So if you had $1 million in both accounts, obviously the one where you're not paying taxes is going to should last a lot longer. I think probably is the better investment. I would argue that it is. If you go back to the beginning when you start putting money into it, unlike an IRA who gets the tax break up front, you don't get the tax break up front. You put after-tax dollars into the Roth IRA. So you don't get that tax break. Say you put $7,500 into the Roth IRA. You use after-tax money to do that, whereas with the IRA, you use pre-tax dollars for that. So two different ways. With the the IRA, you get the big tax. You get the tax advantage up front. With the Roth IRA, you get the tax advantage at the end, which is so much bigger. It's such a better deal than getting the tax advantage at the beginning as with an IRA. So that's the big difference between the two. The marketing, a lot of your financial services companies are marketing what's called a Roth conversion. Basically what you're doing is you're taking an IRA that you've maybe accumulated $200,000 or $300,000 or $400,000 or $500,000 in for retirement, and you're converting it to a Roth IRA. What that does is that gives you down the road the advantage of taking the money out of the Roth IRA tax-free. So you basically, let's say you got $200,000 in your IRA account. You convert it to a Roth. Now that $200,000, as it grows and it grows, then you take the money out tax-free. So you convert that big amount of money into the greatest opportunity that the Roth brings you, which is tax-free withdrawals. Now, here's the rub, is that what the IRS says is, yeah, you can convert it all day long, love the rules, and that's a great way to save money. I want you, for every dollar that you take out of that to convert, I want you to pay taxes on it. So I'll give you a great example. I mean, a very big example. There was a gentleman that I knew, a friend of mine, that had $3 million sitting in an IRA. He wanted to convert it, and he's asking my opinion about it. And I said, well, I don't really particularly like it in this situation. So let's walk through what would happen. He would take the IRA and he would move, let's say, $2 million out of that and into a Roth IRA. He'd pay taxes on the $2 million that he moved. So if he had, a $800,000 tax bill, he'd have to pay. But now any money that he takes out of that Roth IRA is tax-free. Here's the problem with this, and I just don't like the advice that it's just given as a broad blanket statement that Roth IRAs make great conversions at retirement. They just don't, not all the time. So you really have to make sure that this is a fit for you. Here's my problem with it. And Dan Pilla, who's the IRS expert that comes on the program once a month, he was agreeing that this is a problem, is that you have to get the advantage of the conversion. Meaning if you just drop $800,000 worth of funds and you convert that, use that money to convert it from an IRA to a Roth IRA, then you've really got to get the advantage of that $800,000 or it doesn't make any sense. And the problem with that is that you really don't, unless you've got 10, 15 years to make up for the $800,000 you just dropped, and then to take money out without paying taxes on it. You're doing it. You have to accomplish a few things. Make the money back that you put out there that you can use as a conversion, and then you need to let it build to be able to take the money out tax free. And I don't believe that makes sense unless you're in a situation where you converted the account, you don't touch the account, you're leaving it for your kids or whatever. I just don't think it makes sense. Now, having said that, if it does make sense, if there is plenty of time, if that money's not going to be touched and not be utilized, and you feel like you've got 15 or so years, then it could be a great use of money. And it comes to the conclusion to the question: is it a good deal for everybody? No. Is it a good deal for some? Yes, and then some no. So you just want to be careful about the big mutual fund marketing machine, and really look at, does this make sense for me? Because this is what always seems to end up happening, is that pop culture finance says if you add 1 + 2, you always get 3. So if you decide that you want to put your money in convert it from a IRA to a Roth IRA, then that makes sense. Do it. The problem with money is that 1 + 2 doesn't always equal 3. 1 + 2 sometimes equals 5. 1 + 2 sometimes equals 0. It just depends on the situation whether or not it makes sense. And like I said, especially with this Roth IRA, if you're dropping $800,000 on taxes, of course not everybody's going to do that. In this particular situation, I think it really makes, whether you're dropping $800,000 for taxes or you're dropping $50,000 worth of taxes, you've got to get the advantage of that commitment of cash before you can even think about investing. Taking money out and getting the real advantage of that Roth conversion, which is the tax-free withdrawals. So just keep that in mind, and just know that there's more of an analysis that needs to take place. And the way I feel about this. If you're sitting with a financial advisor, or you're sitting with a 401k rep, or you're sitting with somebody from a mutual fund company, and they're pushing something and they're not telling you and really breaking it down and explaining why it makes sense, you want to take a couple steps back and maybe get someone else involved to help you analyze and say, yeah, that is a good deal, or no, I don't think I would do that. The problem is that the tax-free withdrawals, especially off of a big account at retirement, it seems like a great strategy, and it is, as long as it pays off for you long term. This is Bob Brooks, and you are listening to the Prudent Money Radio Show. Listen, by the way, I've had some questions about this. We had Tony Joe was on the program last Friday, and we were talking about ways to save gas. There's a couple of real good websites to go to that are free and give you good information about gas prices and how to save gas, which is a good one. TopTierGas.com and GasBuddy.com. And believe me, we're going to have to be getting geared up here because it really does look like gas prices are going to get a bit out of control. We'll see how it all turns out, but we'll talk about it tomorrow. If you have a question for me, please go to the website at prudentmoney.com and send it in because we are all out of time. Till we do meet again next time, keep the faith and have a great rest of the day.
That's all the time we have for today. Questions or comments for Bob, or to find out more great information like what you've just heard, visit www.prudentmoney.com. Be sure to join Bob Brooks again for the next edition of Prudent Money.